Stellantis has just triggered a market meltdown so big that car buyers, dealerships, and even rival automakers are scrambling to figure out what happens next. For months, the company has been wrestling with slumping sales, rising inventory, and growing pressure from dealers demanding relief. But nobody expected Stellantis to make a move this explosive. Overnight, the company unleashed a wave of discounts, factory incentives, and inventory liquidations that blindsided the entire industry. And now, the shockwaves are spreading everywhere, from small-town dealerships to Wall Street analysts who say this could be the beginning of a full-scale automotive collapse. Car buyers who walked into dealerships this week could hardly believe what they were seeing. Prices on Ram trucks, Jeep SUVs, and Dodge models dropped so sharply that some dealers admitted they've never witnessed anything like it in their entire careers. Vehicles that sat untouched for months suddenly had slashed stickers, thousands off the MSRP, and unheard of lease deals that felt almost desperate. It's so aggressive that analysts are calling it panic-level pricing, something you only see when a company is trying to stop the bleeding fast. And Stellantis is bleeding. Over the last 2 quarters, the company has been sitting on record high inventories, massive lots filled with unsold Jeeps, and Rams piling up with nowhere to go. Dealers begged the company to slow production, but Stellantis pushed forward, cranking out even more units, hoping demand would magically return. Instead, interest rates stayed high, buyers stayed cautious, and now the company has hit the breaking point. The meltdown began the moment Stellantis realized they were out of room, out of time, and out of patience from their dealer network. The solution? Trigger a market shock big enough to move metal fast. But here's the twist. This isn't just affecting Stellantis. The moment these discounts hit the market, competitors like Ford, GM, Toyota, and Nissan were instantly thrown into chaos. When one major player drops prices this aggressively, everyone else is forced to react. Dealers across the country fear this may ignite a full pricing war, something the industry has been terrified of since the pandemic boom ended, because once prices start collapsing, they don't stop until the entire market resets. Car buyers love it. Automakers absolutely hate it. Inside Stellantis headquarters, insiders are whispering that this meltdown is only step 1. The company is preparing a second wave of even deeper incentives starting next month, targeting the slowest selling models in their lineup. Jeep Compass, Cherokee, Ram 1500 Classic. These could be the biggest casualties. Some dealers expect discounts to stack so high that certain vehicles might effectively sell below cost just to clear inventory before year's end. And when an automaker starts selling at or near a loss, you know things are far worse behind the scenes than they want to admit. Meanwhile, used car dealers are panicking. Lower prices on new Stellantis vehicles are dragging used prices down with them. Models that were selling for strong money at auctions last month are suddenly tanking in value, wiping out dealer margins overnight. Analysts say we could be witnessing the early stages of a used car correction that was long overdue, but Stellantis just accelerated it far faster than anyone expected. And still, the big question remains, why now? Why would Stellantis risk a pricing collapse this dangerous? The answer lies in one word: survival. Stellantis is facing pressures from every direction: slowing EV demand, ballooning production costs, union negotiations, and a lineup critics say has grown stale compared to rivals. With consumers tightening their wallets and interest rates crushing monthly payments, Stellantis had no choice but to detonate a discount bomb to get attention. And it worked. The problem is, the consequences could reshape the entire market in ways nobody can fully predict. Even more shocking is how dealerships are responding internally. Some are already reporting massive losses on floor plan interest as vehicles sit too long. Others are warning staff to prepare for layoffs if prices continue to plunge. A few even predict a wave of dealership closures if this meltdown spreads to other automakers and turns into a race to the bottom. And with Stellantis being one of the big 3, the ripple effects are enormous. If they collapse, suppliers collapse. If suppliers collapse, production across the industry slows to a crawl. This is the kind of domino effect that can crash an entire sector. But here's the detail nobody is talking about yet. Stellantis' move may signal something far deeper happening internally. Insiders claim that the company is preparing for a massive restructuring that could involve shutting down underperforming plants, cutting entire vehicle models, and shifting focus to cheaper, high-volume segments. If that's true, then these discounts aren't just price cuts. They're the early warning signs of a strategic overhaul meant to save the company before things get worse. And when an automaker this large begins thinking about survival strategies, consumers better prepare for dramatic changes ahead. And now, the next shock is coming, one that could completely upend the market yet again. Multiple dealership insiders say Stellantis is preparing to offload thousands of units through bulk fleet deals, offering huge discounts to rental companies, government agencies, and commercial buyers. This might clear inventory quickly, but it comes with a hidden cost. It destroys the retail market value of those vehicles. When rental fleets suddenly dump thousands of nearly new Jeeps and Rams back into the used market next year, prices could collapse even further, putting dealers who rely on used inventory in a dangerous position. Some call it a future tsunami that could wipe out profits for months. What's even more alarming is how fast buyers have shifted their mindset. People who were planning to buy a Toyota, Ford, or Honda are now rushing to compare Stellantis' sudden deals, forcing rival dealerships to slash prices earlier than planned. Sales managers who, just weeks ago, were confidently quoting sky-high prices are now quietly calling back customers they previously turned away. The entire negotiating dynamic has flipped overnight. Buyers are walking in with leverage. Dealers are the ones sweating, and Stellantis is the spark that ignited it. Meanwhile, industry analysts are warning that this meltdown could spread globally. Stellantis isn't just an American company. It's tied to massive operations in Europe, South America, and the Middle East. If North American discounts fail to stabilize sales, the company may push similar incentives overseas, triggering a worldwide pricing collapse unlike anything the modern car market has seen. European Jeep dealers are already sounding the alarm as demand softens and inventories climb. If the US situation repeats there, the global automotive balance could tilt sharply. Behind closed doors, executives are scrambling. Emergency meetings, revenue forecasts rewritten overnight, communications teams preparing scripted statements to calm investors. This is a crisis unfolding in real time. And the one thing Stellantis fears most is investor panic, because when investors panic, stock prices fall. And when stock prices fall, credit gets more expensive. Combine that with high interest rates, declining consumer confidence, and expensive EV investments, and suddenly the company finds itself in a storm with no safe direction to steer. But here's where things get even more intense. Some sources claim Stellantis' leadership is quietly debating whether to pivot away from certain EV projects entirely. With demand for electric vehicles cooling faster than expected, pouring billions into EV platforms might no longer be sustainable. If Stellantis begins cutting EV development to save cash, it could reset the entire electric vehicle timeline across the industry. Other automakers may follow. Suppliers could collapse. EV prices could swing unpredictably. This meltdown might not just be about trucks and SUVs, it could reshape the future of transportation. As this financial pressure builds, whispers of internal restructuring are getting louder. Some factories may face temporary shutdowns. Some vehicle lines may be discontinued entirely. Workers fear layoffs. Suppliers fear contract cancellations. In some regions, local economies rely heavily on Stellantis plants to survive. If those plants slow down or close, the ripple effects could devastate countless towns across the country that depend on automotive manufacturing for their livelihoods. And while all this chaos spreads inside the company, car buyers are experiencing something they haven't seen in years: a sudden shift in power. People who spent the last 3 years dealing with insane markups, long wait times, and impossible interest rates are now seeing deals that feel unreal. It's the kind of shift that could reset customer expectations permanently. Buyers who get used to discounts won't easily go back to paying full price, and that long-term shift could force other automakers to lower prices whether they want to or not. But something even bigger is brewing now. Something Stellantis hasn't admitted publicly. Something that could, but something even bigger is brewing now. Something Stellantis hasn't admitted publicly. Something that could shake the entire foundation of the company if it becomes true. According to several insiders, Stellantis is reportedly preparing for a strategic move that could involve merging or forming a deep alliance with a major global automaker. This isn't just speculation. Analysts say Stellantis' sudden pricing meltdown, rapid inventory purge, and aggressive restructuring are the exact moves companies make right before initiating massive corporate alliances. If this happens, the global auto landscape could be flipped upside down overnight. Imagine the scale: shared factories, merged supply chains, unified production lines, and combined EV platforms. It would create a superpower capable of dominating global markets, but it could also bring job cuts, plant closures, and a wave of uncertainty for workers. And dealers are terrified. A merger often leads to trimmed brands, reduced model lineups, and major shifts in sales strategy. Some Stellantis brands that are already struggling, like Chrysler or Fiat, could be first on the chopping block, and if a brand disappears, so do its dealerships. Meanwhile, Wall Street is bracing for impact. Financial analysts are tracking Stellantis' every move and warning investors that this meltdown may only be the first chapter of a much larger unraveling. If discounts grow deeper and inventories continue to flood the market, profitability could collapse faster than expected. Some investors worry that Stellantis may be forced to take massive write-downs on unsold vehicles, triggering losses that could drag down the company's quarterly performance. And once those numbers hit the public, confidence could shatter in an instant. But here's the part that's truly shocking. Even with all the chaos, buyers are winning, at least for now. Families who couldn't dream of affording a new SUV 6 months ago are suddenly driving off the lot with payments hundreds of dollars lower. Contractors are picking up Ram trucks for prices that look like they rolled back a decade. First-time buyers are finally seeing approval rates again. For many everyday Americans, Stellantis meltdown feels like a rare moment where the system breaks in their favor, but even this unexpected advantage comes with a warning. These deals might not last forever. In fact, the moment the market stabilizes, other automakers could rush to push prices back up. Dealers are now walking a tightrope, trying to sell aggressively while avoiding financial disaster. Some have already slashed markups to zero, others are waiving fees just to survive, and a few admit privately that they are losing money on every sale but can't stop now. The factory incentives force their hand. The pressure is relentless, and no one knows how long they can withstand it. Behind the scenes, there's growing fear that the meltdown could spill far beyond Stellantis and trigger a chain reaction. If Ford, GM, Toyota, and Honda feel forced to match these discounts, the entire US auto market could enter a period of accelerated deflation, and deflation is dangerous. Once customers expect lower prices, they delay purchases, factories slow down, inventories grow even faster, financing dries up, and suddenly the industry finds itself in a downward spiral with no easy way out. Stellantis may have started this, but nobody knows who will be the last one standing, and now rumors are circulating that Stellantis is preparing a dramatic announcement, one that could. And now, rumors are circulating that Stellantis is preparing a dramatic announcement, one that could completely rewrite the narrative of this crisis. Some insiders claim the company is getting ready to reveal a sweeping overhaul of its entire US lineup, including the possibility of discontinuing several slow-selling models and replacing them with cheaper, high-volume vehicles aimed directly at the budget-conscious market. If this is true, it means Stellantis isn't just slashing prices temporarily. They're attempting to rebuild their entire strategy from the ground up. Dealers have been quietly warned to prepare for major product realignments, a phrase that typically signals discontinuations, redesigned platforms, and a massive shift in marketing focus. Models like the Chrysler 300, Dodge Durango, Jeep Renegade, or even the Ram 1500 Classic could be on the chopping block as the company prepares to streamline and simplify. Stellantis executives know they can't keep bleeding inventory, and the fastest way to stop the bleeding is to cut the veins feeding it. That means trimming the lineup and focusing only on what sells. But the shock doesn't stop there. Suppliers are bracing for impact too. A sudden shift in production or model cancellation can devastate the companies that manufacture everything from seat frames to wiring harnesses. Many of these suppliers rely on Stellantis orders to stay afloat. If those orders dry up, factories in the Midwest, Canada, Mexico, and Europe could feel the shock instantly. Thousands of jobs could be at risk, and local economies that depend on automotive manufacturing might be pushed into crisis. This isn't just a Stellantis problem anymore. It's an industrial chain reaction waiting to explode. Meanwhile, the ripple effects on consumers are getting even more unpredictable. Buyers who already secured steep discounts are worried they might have purchased a model that could be discontinued. Others wonder if they should wait even longer for deeper price cuts. And those who financed at high interest rates months ago are furious, watching new buyers get deals they could only dream of. The mood in the market is shifting fast, and Stellantis' meltdown is creating uncertainty like we haven't seen in years. Financial experts warn that this level of instability can quickly lead to something much larger, a full-blown consumer confidence crash. When buyers lose trust in pricing, in inventory levels, in brand direction, or even in the future of certain models, they stop purchasing altogether. If that happens on a large scale, it could freeze the entire US auto market. Showrooms go quiet, dealers panic, manufacturers slash production, and the economy feels the impact instantly. Stellantis has unintentionally put the the entire industry at that tipping point, and behind all the rumors, predictions, and warnings, there is one question nobody has answered yet. Is Stellantis making these desperate moves because they see something ahead? Something the public doesn't? Something that could shake the entire automotive landscape if revealed? Some insiders whisper that Stellantis' leadership has been analyzing internal forecasts that show a far darker picture of the next 12 to 18 months than anyone outside the company realizes. These forecasts reportedly predict a significant drop in consumer demand, a potential collapse in residual values, and a massive oversupply issue that could overwhelm not just Stellantis, but the entire US auto market. If Stellantis is acting early because they've already seen the cliff coming, then this meltdown isn't an accident, it's a preemptive strike. And here's where things get even more unsettling. According to those close to the situation, Stellantis fears that interest rates might remain high far longer than expected, putting millions of buyers permanently out of the new car market. If that happens, manufacturers who rely heavily on high-volume sales, like Stellantis, could face an existential crisis. They might be forced to choose between slashing prices dramatically or watching vehicles rot on lots. This is why some analysts believe Stellantis pulled the trigger first. They'd rather take the hit now than be dragged into a far worse collapse later. Meanwhile, rival automakers are watching every move like hawks. Ford executives reportedly held emergency strategy meetings as soon as Stellantis' incentives leaked. GM has been quietly adjusting inventory and whispering to dealers that flexibility might be needed soon. Toyota, historically conservative with discounts, is facing pressure from dealers demanding help to stay competitive. The fear is spreading. No company wants to be the last one to react in a price war, but none of them want to be the first to spark total market chaos either. Stellantis already did that. As all of this unfolds, the used car market is spiraling in a direction no one predicted. With new vehicles suddenly cheaper, used prices are falling faster than dealers can react. Auction floors that were once buzzing with aggressive bidding are now quiet, with buyers lowballing or walking away entirely. Cars that were profitable last month are now selling at a loss. Used car dealers, already struggling with narrow margins, are now holding inventory that loses value every week. If the meltdown continues, thousands of small dealerships could be at risk of shutting their doors. And yet, there's a deeper tension growing beneath the surface. Inside Stellantis itself, employees across multiple plants and divisions report feeling left in the dark, anxious, and increasingly uneasy. Rumors are spreading about possible wage freezes, hiring pauses, and even long-term shutdowns to realign production with demand. Workers who survived previous downturns say this moment feels different, heavier, like it's the beginning of something much larger. They're waiting for the next announcement, the next abrupt shift, the next blow that could redefine their future. At the same time, brand loyalty among consumers is cracking. Jeep owners who once proudly paid premium prices are now asking why their vehicles depreciate so fast. Ram customers are frustrated that trucks they bought last year are suddenly worth thousands less. Dodge fans are confused about the brand's future direction as Stellantis reshuffles priorities. When loyalty breaks, it rarely comes back quickly, and Stellantis may have unintentionally triggered a loyalty crisis that could haunt them for years. But perhaps the most shocking part is what industry insiders believe Stellantis might reveal next. A revelation that could send an even bigger shockwave through the entire automotive world. Industry insiders believe Stellantis may be preparing to expose a massive internal restructuring plan, one that could involve shutting down multiple factories, consolidating production lines, and abandoning entire vehicle platforms that are no longer profitable. If true, this would be one of the largest corporate overhauls in recent automotive history, and the timing couldn't be more alarming because a move this drastic in the middle of a market meltdown could deepen the crisis instead of stabilizing it. This potential restructuring wouldn't just trim excess, it could radically change the identity of brands consumers have known for decades. The future of Chrysler, already hanging by a thread, could be rewritten overnight. Dodge, which relies heavily on performance models, may face a complete transformation as emissions regulations tighten and electrification stalls. Even iconic Jeep models might not be safe if Stellantis determines they aren't delivering the margins needed for long-term survival. Imagine an auto market where the Cherokee disappears or where the Challenger never returns. These aren't wild predictions. These are scenarios quietly being discussed behind closed doors. Meanwhile, dealers are bracing for what they fear could be the next devastating blow: allocation cuts. If Stellantis decides to reduce the number of models they produce, dealers will receive fewer units, fewer trims, and fewer opportunities to make money. Some stores rely almost entirely entirely on high-volume models to survive. Losing them could force dealerships, especially smaller, independent ones, to shrink, merge, or shut down altogether. The industry has already lost thousands of dealerships over the past decade. Another wave could be coming. At the same time, financial markets are becoming increasingly uneasy. Investors are demanding clarity. Analysts are questioning Stellantis' long-term strategy. Some fear the company is preparing for something much bigger than discounts, a complete reorganization of how it operates globally. If this triggers a sell-off in the stock, it could worsen the company's financial position right when it needs strength the most. And once confidence erodes, it's incredibly difficult to rebuild. But the biggest wildcard in this unfolding crisis is consumer reaction. Car buyers are watching the chaos unfold in real time. They're seeing prices drop, incentives rise, and inventories swell. And with each passing day, more buyers are deciding to wait, hoping prices will fall even further. This behavior is dangerous for the entire market. When consumers expect discounts to get better, they stop buying. When they stop buying, inventories swell even more. And when inventories swell, automakers panic and slash prices again. It's a cycle that can spiral out of control, and Stellantis may have already set it into motion. Yet beneath all the noise, one final rumor is gaining momentum, one that could flip this entire story upside down. Some insiders claim Stellantis is preparing to reveal a hidden project, something quietly developed behind the scenes, something that could, and as this meltdown continues to unfold, one thing is absolutely clear. The automotive world is changing faster than anyone expected. Stellantis has thrown the first punch in a battle that could reshape prices, brands, and the entire future of car buying. Whether this move saves the company or pushes the industry toward a deeper crisis, only time will tell. But one thing is certain, the shockwaves from this moment will be felt for years. If you found this breakdown eye-opening, make sure to hit that like button, subscribe, and turn on notifications so you don't miss the next chapter in this unfolding story. Because the automotive dominoes are already falling, and what happens next could be even bigger. Thanks for watching and stay tuned, because this story is far from over.